This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Paper F7, June 2010, question 4. Well, I already planned an answer to part A of question 4 for 5 marks. Remember, it's the framework, fair reflection, fair presentation, economic reality, global investor, explain why it's important that financial statements should reflect. So I've just got the part B and part C for 10 marks in total to do. So let's look at part B. We can't do part C without doing part B. The activities include the production of maturing products which take a long time before they're ready to retail. Details of one product on the 1st of April, with year end is March, and look, we're doing 3 years. 3 years to March 12, so that's March 10, March 11, March 12. Entered into an agreement. Details of one product. First we had a cost of 5, a fair value of 7. The product would not be ready for retail until 12. On the 1st of April 04, we entered into an agreement to sell the product to Easy. So we're going to have a sale in 10 for 6 million. Cost of sale, we're told, is at 5. So we're going to have a million profit. And then the agreement gives us the right to repurchase at any time at a fixed price of 7,986. So 7.986 will buy back in the attempt, and we expect it to sell for 10. So we're going to make a profit of 2.014. Nothing will happen in year 11. So we've got an overall profit of 3.014 over the spread over the 3 years. The compound interest for Wardle would have to pay on a 3-year loan. So if we've got 10, 11 and 12, and if we're to treat it correctly, substance is that we've not actually sold it, but we have borrowed money. We've borrowed money on 6 million, and so we've got finance charges of 600, and finance charge in the second year of 660. Is it 10%, isn't it? Yes, it is 10%. And 726, and then we're going to sell it for 10 million, so we've got a 10 million sale and a cost of 5 million, because that's been sitting in inventory all this time. So I'm going to have a loss of 600, a loss of 660, 5726, 4274 profit, which gives me a 1,260 off that, 3,014 overall profit. So the profit figure is the same. Reflecting the legal form of the transaction, that's this one. That's this one, the legal form. That should get me 2 marks. This is the substance form. That should get me 3 marks. And so that's the position I'm in for part B. And then part C, comment on the effect the two treatments have on the income statements and the statements of financial position. Well, just going back up here, comment on the effect the two treatments have on the income statements. This 3014 has been spread out. It's not been spread out particularly well, because clearly there's nothing in year 2, but nevertheless we're recognising profit in year 1 of 1 million, and yet we're not actually achieving it. So we've smoothed out the profits here to a degree. We've got 1 million, nothing, and 2. So it's effectively smooth. Whereas with this one, we've got a 600 loss, a 660 loss, and a 42 gain. And that's the substance of it. The substance is that it's a loan. We don't also show, because we're not asked to, when statement of financial position extracts are not required, we're going to have inventory here. We're going to have inventory of 5 million and 5 million and 5 million. Sorry, for 2 lots of 5 million. And we're going to have a loan, a long-term debt of, 7 million? 6 million. We're going to have a loan here of 6 million, and then still a loan of 6 million, but with the interest accrued on it, so 6.6. So actually quite a major distortion if we simply reflect the legal form, that is, that we claim that we've sold it, and it's quite a distortion on the income statement and on the statement of financial position. Clearly, things like asset turnover will be affected, and gearing is obviously going to be affected, gearing ratios, and it's going to be distortion for users of the financial statements if we don't fairly reflect the substance rather than the strict legal form. Okay, I think I've chatted enough about that. I think I could make myself into 5 marks with there. And that completes the exam, because I did question 5 earlier, so that completes the exercise.